Greg, I want to start with you because you're concerned that even though we have seen a big run-up, you think that it could be tougher sledding from here. Why?
Yeah, Becky, and I think this is actually binary. I think that if we see some elements of stimulus in this December 11th budget or even a broader announcement, that's going to provide another leg of optimism to the market. The economy certainly needs it. And I think that that's really the key thing that could provide for further tailwind from here. Absent that, I think that the rising COVID numbers and the reintroduction and retrenchment around stay-at-home is going to start to dampen enthusiasm. And I think that until we get that stimulus, until we get that transition, that I'd be careful about going sideways and down. A good indication is the Russell 2000. Any time that we've seen a jump like that in a month of over 11%, even going back 40 years, that has led to some near-term weakness in just about every instance.
Yeah, and the Russell 2000 was up 18%. It was the best month it's ever seen. Greg, you were skeptical of the idea that we'd be getting any stimulus at all before next year, but have you changed your mind based on what we're hearing this morning? Because the futures are up by about 366 points. It looks like it could be because the market is anticipating that something might get done. We're going to be talking to Senator Warner, who's been working on some things with the bipartisan group later this morning.
Yeah, Becky, I'm certainly more optimistic. Before, the last week or two, all of the political will, all of the political bandwidth was being consumed in a contested election. And there's still some elements of that as we look towards Georgia. Moreover, I think that they probably burned some bridges with each other, and it will take some political fortitude to sit back down at the table. I'm hoping that it's not an unbridgeable gap. So we have more reason for optimism, particularly as political pressure increases. But I've learned never to overestimate the political will either. And so I'm hopeful, but certainly not anywhere near certain.
Hey, Craig, you have two big investing themes that you've been kind of focusing on that you think are going to continue or start up for next year. One is the de-urbanization play. You think that really is something that will continue in 2021. You want to talk about the stocks you see that could benefit from that?
Yeah, sure. We do think this is a trend that could last a significant long period of time. Several things driving this trend. Of course, COVID and a lot of the political unrest you see in high dense, large cities, very restrictive government. You see people, for example, in California, where people are leaving the state because of real restrictive governments. And all this is happening at a very time where all of a sudden technology has created remote working possibilities. So why do you have to be in these large cities with a lot of issues where you can just about live anywhere? And this is happening at a time when millennials, the largest demographic in history, 73 million people, is reaching the age of where they're starting families and moving out of apartments and getting married. And so at a time when you have a historic low interest rates and a housing shortage, about a 3-month supply, we think housing, not just housing stocks, but all the housing plays could be tremendous over a 3 to 5 year period. Our favorite play in the area is Taylor Morrison Homes. It's an entry-level builder, Texas, Colorado, Arizona, Georgia, Florida. But it's trading about book value, which makes it among the cheapest housing stocks we see, but it also has about the fastest growth rate of any stock in the housing. They made an acquisition last year of of William Lyon Homes. So, we think that's a really good looking situation. Another play there is Rocket Mortgage. We think Rocket over the next 4 to 5 years could become the dominant mortgage refinance player. They've got about a 10% market share now. We think that'll be closer to 25% by 2030. In fact, they're saying that. So this could be a really interesting play that goes out for a while.
Craig, your other big play is this idea of infrastructure, and you think the Biden administration is going to be putting a lot of money into infrastructure. The company you like there wasn't one I was familiar with, Commercial Metals. I had no idea that they had over 50% of the U.S. rebar market. That's kind of amazing.
Yeah, it's a company we've known and followed for many years and owned for many years. They about a $3 billion market cap, like you said. They have a 50% share of the rebar market through their Gerdau acquisition they made a couple of years ago. It was a criticized acquisition, but it turned out tremendous. It's done much, much better. That acquisition has been a tremendous one, and they've gotten their debt levels down to very manageable levels. So we think that stock's very undervalued, commercial metals.
Shepard Smith here. Thanks for watching CNBC on YouTube.